All right, our currency of the week is Aussie dollar. Here is the beautiful Opera House in Sydney, a map of Australia, and well, one of Australia's natural symbols. All right, but let's talk about economy. Let's talk about Forex, about the Australian dollar. It used to be a great technical pair, respecting lines of support and resistance. It's still okay, but it's stuck in range for a long time. The pair is better when it is trending. In general, the Australian dollar is a risk currency. That means it usually rises with stocks, with commodities. It's a commodity currency. With a good mood in markets, it's a risk-on currency. Remember that because the dollar is not always like that. Okay, the US dollar. So that's generally about Australia, the Australian dollar. Let's talk about the Australian economy. The Australian economy relied for a very long time on the mining boom, iron ore, copper exports to China in general, but it's gradually moving away from mining. It has been boosted by the recent rise in commodity prices and renewed Chinese demand. So we have the Chinese Party Congress coming up in October, November, and the current regime there in China, led by Xi Jinping, which is going to visit Trump this weekend. They want to keep the economy running. It's strong growth. It means using the normal motors of growth, like industry and exports, and they're not moving away, and that's good for Australia at the moment. So even though the Australian economy is gradually moving away from mining, it eases the transition if Chinese demand remains strong. What else is going on in the Australian economy? The jobs market disappointed last time, but all in all, it looks stable because we had a few good months of nice job gains. So it's all in all quite stable. Inflation is slightly low, a bit under what the RBA wants it to be, but it's nothing terrible. So all in all, if we look at these main indicators, things are okay. But we could find some worries about, as always, I must say, it's running already for a few years, about the housing sectors. Homes in Melbourne and in Sydney look a bit frothy, as the Fed used to say. And we should look out for any macroprudential measures that could substitute rate hikes. That means if the RBA, using its powers as a regulator, decides to limit mortgage taking, trying to cool the housing market, but without raising rates, to do that, we could see the Australian dollar fall. So far, they haven't been doing too much in comparison to their counterparts in New Zealand, for example. The RBA, which made its decision this week, did not make any changes and is not seen as making any changes later this year. They kept things quite balanced. They kept their same wording about the Australian dollar, which was that a stronger Australian dollar would complicate the transition away from the mining sector. Basically, no change on that front. Let's talk quickly about the United States, because we're talking about the Aussie against the US dollar. We're still looking for direction after the Donald disillusion. So President Donald Trump, his administration is not getting too many things done. At least we had the colossal failure of Trump Care, and taxes, they're moving very slowly. So the US dollar, which rallied on Trump's election, is now looking for a new direction. Still not a total disappointment, not an undoing, but sort of doesn't have the fuel, doesn't have the energy. The Fed it made its dovish hike, but they're still upbeat, so they bounced things out. Watch out for today's FOMC minutes, perhaps, for more clues. Slow growth in the United States, we talked about that early in the show. It could weigh. So far, the jobs market is rising quite quickly despite slower growth, but this could change. And the US dollar, it's important to remember, is a secondary safe haven. So if we have a violent correction in stock markets, okay, the Australian dollar is a loser, and the US dollar will not gain as much as the Japanese yen, but it is set to gain. It's a secondary safe haven. So what's next for the Australian dollar? We'll look again at the charts, but before that, all in all, things look stable. Look for issues in Australian housing. I think that's sort of the underreported story regarding the Australian dollar. Or perhaps on the positive side, we could see stronger Chinese demand, even stronger Chinese demand ahead of the big party gathering, the Communist Party in China. But for now, the movements in the Aussie dollar depend a bit more on global markets and stock markets and on the US dollar, okay? So, of course, events in Australia and China matter, but I think they matter a bit more in the United States. So let's look at the Aussie dollar chart to complete this segment. It's the daily chart. Currently, we're at 75.86. Support here at 75.40. 75 below that, we have 74.50 and 73.75. To the top side, 76.10, which was the initial stepping stone on the way up. 77, 77.50, and even further above, 78.40. But currently, we're a bit stuck. Right, I see here a comment by Ed. If minutes of a corporate meeting were to be revised last minute, like the Fed does, it's called fraud and misrepresentation, but the Fed does it, no one screams fraud. Well, the minutes are not revised, they're actually released for the first time, but they take their sweet time in releasing the minutes. I must say that the Bank of England, they changed their the way that they work, and now they release the meeting minutes alongside the rate decision. So once the decision is out, you can read all the protocols. And also there, of course, they could change what it doesn't have to actually reflect. You have to be in the room to really know what's going on. But yeah, so but this delay of 3 weeks allows the Fed to decide what message it wants to convey and sort of set the tone. I believe it is a true representation of what happened, but the tone, the messages can differ.